Hi guys, welcome back to the channel. If you are new, please consider subscribing so that you get notified when we post future videos. If you are a returning subscriber, welcome back. Like this video, you know what to do. If you are looking for forex robots, indicators and stuff like that, there are links in the description box below. Go through the blogs and see if you cannot find what you're looking for. Then you can always come back and leave a request in the comment section below. That is, if you have gone through the blogs and you didn't find what you were looking for. Okay, so today I want to make this video short. We're going to discuss some of the pairs that you need to avoid if you've got a small account. And on top of that, if you are an inexperienced trader, and on top of that, if you are an experienced trader who is not consistent, you are trying to find consistency with your trading, because although you're experienced, you are not realizing the profits that you think you should be realizing. Okay, so let's get into the video. By the way, if you have forex pairs that you think people need to avoid if they've got small accounts, and if they don't know what they are doing, or if they are looking for more consistency, leave them in the comment section below. I enjoy reading your comments. I read all your comments, so I'd like to hear what you think, which pairs you think people need to stay away from if they've got small accounts and when they have no idea what they are doing. Okay, so let's start with defining small account. The term small account is relative. For example, for many people, of course, a $10 account, which is offered by my broker. For those that don't want to bet a lot of money at first, you can start with $10 with my broker. Links in the description. And you can see if forex is for you without losing a lot of money. So a $10 account is definitely a small account. It doesn't mean that I've not seen people have turned those $10 accounts into hundreds of dollars. I've seen people have turned those $10 into $200, $500. Myself, I've always consistently turned it to around $200, $300, $400, sometimes $500, but that's what I do. I do sometimes flip small accounts. But to other people, if you say you are trading with a $10 account, certainly they will laugh at you because it's a small account. To some people, anything less than $1,000 it's a small account. To some people, something less than $10,000 is a small account. For some people, something less than $500 is a small account. So the term is relative. I am not going to delve into that too much, maybe in another future videos. But if you want to leave a comment in the comment section below, what's a small account for you? Leave a comment in the comment section below. So having talked about the small accounts, which pairs do I think you need to avoid if you've got a small account and you're just starting out, and even when you're an experienced trader and you are not consistent, you are not realizing the profits that you think you should be realizing? You need to know that forex is like hunting. It's like hunting. You need to choose your prey carefully. I don't know if your mentor or the person that you're learning from has taught you this, but you need to choose your pairs carefully. The reason is some of these pairs have their own characteristics. They've got their own behaviors. You can actually tell that that person is trading gold, even when that person has not shown you that it's gold, or if not told you that it's gold. You can even tell that that person is trading GBPUSD because of the way it moves. You can tell that that person is trading an exotic pair because of the way they move. So Many of these pairs have their characteristics, and if you're not familiar with these characteristics, it's very easy to get things wrong. So the first one that I will say stay away from if you have a small account and you certainly don't know what you're doing is gold. Gold moves. If you know what you're doing, you can capitalize on it. I promise you, you can make a lot of money with gold. But if gold catches you on the wrong side of the market and your account is so small that it cannot handle the drawdown, you are in trouble. You are definitely in trouble. It also depends with your lot sizing. So after studying the characteristics of these forex pairs, you also need to then decide on your lot sizing so that you don't put your account at risk. So gold, definitely you need to not be reckless with your lot sizing, and you need to understand it first. It's easy to trade gold once you get the hang of it, but if you don't know what you're doing with gold, trust me, because 10 pips on gold is worth more than 10 pips say on Euro NZD or Euro GBP or some other pair. So gold is one to stay away from. Learn it first and understand how it moves, then you can trade it. The second one I'll say is USD yen. Well, the dollar is the dollar. It's one of the major currencies of the world. But again, the Japanese yen is a king in the Asian markets. So when you're trading the US dollar and the Japanese yen, you're basically trading two strong currencies against each other. Where in forex you want to try and find as much as possible a strong currency versus a weak currency. So be careful when you're trading USDJPY. Need to understand it, need to study it if you're getting involved in USDJPY. Another one is GBPJPY, especially with the Brexit thing that has been happening. Like I've already talked about, the yen is a strong currency, and the GBP is London, is the UK. The UK is one of the biggest economies in the world, so definitely you are trading one strong pair and another strong pair. You need to be careful with that. You need to study it. It moves. When it moves, it moves. It's the GBP pairs, when they decide to take off, those pairs, they take off. So you don't want to be caught on the wrong side of the market with a small account that cannot take drawdown or cannot take a negative position for some time. Then certainly you need to watch out for the Aussie dollar versus the Japanese yen. The Australian dollar might not be as strong as the US dollar, the GBP, but it's certainly a strong currency in Asia. So when you're trading the Australian dollar versus the Japanese yen, another strong currency, you are again wrestling one strong pair and another strong pair. So you need to watch what you're doing. The Aussie is usually correlating with the price of gold, so that certainly tells you that you need to be careful. The same way you are careful with gold, you need to also pay attention with the Australian dollar. Then you need to be careful of indices. If you have a small account, and you also don't know or do not yet understand how the markets move or what you're doing, or you are looking for consistency, study indices first before you jump in, like your US 30. or your US 500 or your NAS 100. You have seen videos of people showing off their trades, how much money they are making, because those indices, you can make a lot of money. When you can wait for days to make $100 with the standard forex pairs, you can make $100 in one afternoon with the indices. But you need to know what you're doing. So German 30, UK 100, and those things, you need to understand first what you're getting yourself into. Then one last thing is exotic pairs. USD peso, USD versus Turkish lira, USD versus Russian ruble, USD versus Singapore dollar, I think USD versus Hong Kong dollar, USD versus what's the Chinese currency, I think yuan or something like that, or USD versus South African rand, USD versus or you also get the euro versus Danish krona, euro versus Polish whatever, euro versus the lira, euro versus some other funny currency. Those things, I promise you, they are dangerous. First of all, what I observed with exotics, because they are exotics, you find that your broker will widen the spreads. So you need that pair to move a certain distance, a certain number of pips, before you can actually get into profit because of the wide spread. And then these exotics usually are pairs from emerging markets, where things usually are so volatile. So these pairs, if you manage to get them on the right side, they can move with you. But if you get caught on the wrong side with these pairs, you definitely pay for that. So yeah, leave a comment in the comment section below. List some of the pairs that you think people need to avoid. By the way, I always recommend people to just find 5 pairs maximum. Find 5 pairs maximum. Study those pairs, know their ins and out, and you'll be fine. Usually people have got a whole list. They want to trade the whole 100 or 200 or 1,000 pairs that their broker offers. You cannot, because you need to understand how these pairs behave. So I always advise people, choose 5 pairs that you love. I've seen people who have traded a single pair and they've made a lot of money just trading a single pair. The problem is people don't have patience and they don't want to wait for their pair to present the setup, so they go on and find another 100 pairs to look into, and that way they are not consistent and they are constantly losing money because they are not understanding the pairs. They are just jumping from one pair to the next, one pair to the next, one pair to the next. Okay, so like this video, leave a comment in the comment section below. Until next time, guys, bye.